Good morning, and thanks so much for tuning into the trade setup. It's Friday yet again, and the global news flow first. The US inflation data was expected. The core CPI posted the smallest back to back increase in 2 years, but yields have still risen. Asian markets rose as or are rising as US inflation cools more than expected. Wheat heads though for the weekly advance with Black Sea risks in focus. And this is important because we're seeing agri commodities facing some stress or rather some rises. We've seen that happen with sugar, with rice, seeing with wheat. So it's important. By the way, in other news, global shipping CEO sees green shoots, says container rates may rise. Well, let's see if it shows in the Baltic dry and container and freight rates, and therefore does it become a small shot in the arm for global shipping companies. I think time will tell. First, now the US markets and what they did in trade yesterday. Well, a minor increases. The futures too are kind of trading marginally higher. The interesting thing is the yields, which were cooling at about 4% went up to about 4.1%. I think 4.11 as the 10-year yield is showing. Otherwise, other things are steady and not big changes. Now, we had a bit of a corrective move yesterday. What is the gift nifty saying today is the key question, just to highlight. Well, flattish move, no big changes anticipated. Now, what's the trade setup? Actually, just before we get to the trade setup plate, uh, let me show you what we've done in the last one day, the last 5 days, and the last 1 month. We talk all so much about what could happen to the index. Frankly, I might have pontificated so much about every single day about what could happen to the index. It's gone nowhere in the last whatever this time period. One day, yesterday was down about 0.46%. Of the 5 day period, 0.32%. But if you thought 5 day was too short, 1 month, 0.53%. Yes, even 1 month is too short. But from a trade perspective, I'm just trying to say that the index is really consolidating. Yes, it may have moved up a little bit and come off a little bit, but it's really in this consolidation mood currently. So, you know, maybe the trade setup plate is meaningless from an index perspective. Yes, so global markets are benign, and therefore we may yield a day in the green, but the index may necessarily not go anywhere. In fact, the banks are looking a very weak lot. The only question is if indeed there are these global flows that come in because of the FTSE rebalancing, MSCI, etc., then we might see banks still being in play. So bear that in mind. NBFC bets, though, on the rate cut premise are on hold for at least till September. Come Feb, March, we had heard so many of these notes that let's move into NBFCs because rate cuts are around the corner, and therefore banks' NIMs will contract and NBFCs will actually gain. Now that the RBI has said what it has said yesterday, and even if you assume that the market discounts things 6 months in advance, right? So if the first rate cuts are due to happen sometime in April or beyond that, then at least till September, there's no question of the markets trying to preempt rate cuts and therefore bet into NBFCs and log out of banks. So that trade, if anything, is not happening till September. The other interesting thing that I've noticed is that the results season and momentum are in favor of mid and small cap infrastructure stocks. And today we'll highlight some of the results as well that came in. But even if you look at the momentum, out of the blue, HCC went up this big 15-20% move intraday because the rumor was that a large Indian conglomerate will take stake in HCC because it will need it for its construction purposes. May well happen. I have no idea. My limited point is rumors of all kinds are floating around these, but there are very smart names which have logged into some of these stocks. I mean, Vijay Kedia has been a notable buyer in Patel Engineering. We've seen various names getting associated with Hindustan Construction Company as well. There's a company called SCPC. I don't know much about the business, but it's come out with some fabulous numbers, and I'll get to them in a moment. So lots happening within the small cap and mid cap infrastructure stocks, and those need to be watched out for. A clutch of very, very important numbers today, by the way. It's a big day for results, I can assure you that. There is ABB India, and key is what their commentary is. There is Astral, and key is what their volume growth is. There is HAL, and key is what is their performance because the stock has done, well, reasonably well. Can JSPL outdo what Tata Steel and JSW Steel did? Well, let's see. Time will tell. It's imperative upon Info Edge to come out with a good set of numbers, considering what's happening in that space and the kind of moves that a Zomato, PB Fintech, and some of the others have done. PNC Infratech, again, because of all the smaller Ps doing so well. Let's see if PNC Infratech from the infrastructure space does an encore. A lot would be expected of PFC because the commentary in our interview as well was very, very strong, and media is in focus. Yesterday, Z was active, the Network 18, TV 18 twins were active. Let's see if Sun TV results turn out to be well. And Nykaa, can it do what a Paytm and a Zomato have done? Well, let's wait and watch. So lots of important results today. And stocks to watch, it's a longish list. I've tried to condense it a little bit, viewers, to be very honest, but I cannot help but start with HCL Technologies. It's won a deal worth $2 billion in this time wherein deals are few and far in between. HCL Tech comes out and says that, hey, look at us, we won a $2 billion deal, 6-year deal with a global 100 corporation. A total contract value of 2 billion is very strong, and therefore this should be a shot in the arm for the stock of HCL Tech as well today. I would be really surprised if it doesn't react positively. Then Z, the winner, the big winner of yesterday. Now here's the deal. MK says a buy, a target price of 335. They say the NCLT decision a major shot in the arm for Z. They remove their merger uncertainty discount of 10%. The necessary approvals from stock exchanges and CCI have already been received. Promoters' proceedings are unlikely to derail the merger. They reinstate their previous targeted EV/EBITDA of 9.5 times from 8 times, with merger completion now in sight and improving business outlook. Z also has been reinstated as a buy at BofA Securities, by the way, with a target price of 415. So, well, you can suspect that if institutions wanted a piece of Z and they were waiting for clarity, now they have that clarity. Will it mean that institution buying will necessarily happen? I have no idea. But the fact that BofA is reinstated as a buy, other brokerages which may have coverage or are saying that it's a positive, and of course it's a positive, we know that. I'm just saying, maybe, just maybe, some HNI, PMS, if not institutions, might come in today as well. Who knows? So let's wait and watch. I would suspect that Z could do well or continue to do well. If not today, then over the medium term. So do watch out for Z. Then the results. Hero MotoCorp. Revenues up 4%, 8,767. The estimates were 8,958. Largely in line, maybe marginally lower. EBITDA 1,206. The expectation was 1,185. Again, largely in line, maybe marginally higher. Margins 13.8 versus expectations of 13.2. Net profit 32% higher at 824 versus 624. The estimates were 876. The operating leverage as well as the fall in other expenses lead to this EBITDA performance and EBITDA margin performance for Hero MotoCorp. But I think largely you will see some action maybe post the con call, because in Hero's case, it is not the numbers but the commentary that Hero has to give around business, around a lot of other things surrounding it, which may impact. The call is at 11 a.m. So until then, maybe don't expect too much. Maybe post that there could be some moves. So watch out for Hero. Then Biocon actually came out with a operationally a shoddy quarter, if you will. Actually, it's not a shoddy quarter. Sorry, let me rephrase myself. Here's the deal. The revenue is up 60%. You take it with both hands, right? Extremely strong showing there. EBITDA up 79%, decent showing there. The margins have expanded. The expectations were much higher. Bloomberg estimates were 24.7%, and there is a bit of a miss there on the expectations. But they've clocked in a 200 basis points expansion in margins. Net profit, though, is down about 30%. The expectations are 157, so much lower than expectation on net profit front as well. Monal, my colleague, has filed a story around what's happened in Biocon. If you want more details, you can read on our website as well as to what's happened in Biocon this time around. But yeah, the numbers on the operational front relative to estimates are a miss, and which is why the net profitability too. And there are some one-offs, of course, out there, or some below the operating line items which are even more severe for Biocon, as a result of which, despite a margin expansion and EBITDA and a revenue expansion, the net profit is down. But yep, very likely the stock could react negatively. So do watch out for this one. Yep, I think Virat has just pulled out that story will come. Nevertheless, all we are trying to say is that there's a story around Biocon, and you might want to read it as well. So do watch out for that. Then some some other large numbers and some small analysis around some of these. So LIC, there's a weak APE growth and weak APE, 7.2% lower, impacted the VNB growth, which was down 7%, which was a 12% miss versus estimate. Sale, the higher cost drag margins, EBITDA per ton was at 4223 per ton, which was down 27% YOY, 32% QOQ, and below estimates of 4,488 rupees per ton. Honeywell Automation, the increase in input costs led to a contraction in EBITDA margins despite decent growth in top line. So some large names, these were the key things that I thought stood out. And I just thought it was important to highlight LIC in particularly this way, because the reported profit number is a big jump. That may not necessarily mean too much for the stock today, because the AP numbers have looked wobbly, and as a result of which the VNB growth hasn't looked the strongest. So watch out for LIC today. Then construction names, right? So I was telling you about this small company, SEPC, the Q1 numbers, revenues at 143 crores versus 59 crores, PAT at 4.93 crores versus loss of 30.84 crores. Now, viewers, I confess, I have zero idea about SEPC and its business per se and what has led to this, but the reported numbers look rock solid. Just thought should bring it to you. And in line with that, it's an infrastructure company. In line with that, NCC2 has had a decent showing. Revenues up 31%, margins 9.34 versus 9.26, and net profit up 33% at 174 crores versus estimates of 130 crores. So good showing by NCC as well. So very likely that the infra stocks could have a decent day. What may not have a decent day is Concor. Revenues fell 3.5% at 1923 versus 1994. EBITDA margin 20.6 versus 24. Net profit fell 17% to 245 versus 296 crores. Some other companies which had a wobbly, weak numbers and weak margins. Sanofi, Q1 EBITDA margins 25.23 versus 28.2. Oriental Aromatics, EBITDA margins at 0.47 versus 7. Ugar Sugar, Q1 EBITDA margins at 2.81 versus 6.56. MTAR, Q1 EBITDA margins at 22.63 versus 27.42. The only alert out here is that MTAR actually didn't have weak results because the revenues were up 67%, but the margin performance was slip shoddy, as a result of which the numbers look slightly wobbly. But the revenue numbers were very strong. So on MTAR, I'm not 100% sure about the reactions, but the others, very wobbly numbers and could have a weakish performance. In fact, Chemplast Sanmar 2 would have a weakish outing today. Revenues were down 29% at 996 crores. EBITDA loss of 34 crores versus EBITDA of positive gain of 194 in the corresponding quarter, and a net loss at 63 crores versus a net profit of 40 crores. So look very weak and could react negatively today. Decent results for some of the smaller names. Some small names like Paramount Communications, the EBITDA margins were at 7.97 versus 4.76. BMW Industries, EBITDA margins at 23.29 versus 19.75. And Orchid Pharma, EBITDA margins at 12.1 versus 9.5. So watch out for these. Then some MSCI August quarterly index review. There were 8 additions and 1 deletion. So Cummins, Ashok Leyland, IDFC First Bank, Astral, the names are on your screen. These were the additions. Both PFC and REC make the cut. The exclusion was ACC. And in fact, a lot of people believe that the stock of ACC did not react too positively to its numbers because of this expected MSCI exclusion. Now, all of these names were known. I think MK has done some analysis on what could happen to stocks. Why I thought it was interesting is because of the first line, that they are saying that Cummins actually had a lot of shorts in the last few days and therefore could see a short covering rally, because according to MK, the expected inclusion is about $108 million, which is 7.4 times the average daily volume. So watch out for Cummins. There's a lot of position built up in HDFC and AMC and Astral. While the expected inflows are strong, but there is already some bit of long build up there. So be mindful of that. And ACC's deletion, according to them, could bring about an outflow of $47 million, which is 5.5 times average daily volumes in the stock. So watch out for ACC. Could see a bit of a corrective move today, despite the positive results. Standard disclaimer, ACC is a part of the Adani Group, and AMG Media Networks, which is a subsidiary of Adani Enterprises, holds 14% stake in Quintillion Business Media. which is the owner of BQ Prime, which is the platform on which you are watching this. Now, a clutch of conversations happening today on BQ Prime. Talking point, we have Rushabh Sheth, co-founder and co-CIO of Karma Capital. They've actually made a pivot towards large caps in a meaningful way. Would be interesting to see why they are doing that at a time when everybody's talking about mid caps. Alpha Mughals today at 10:30 a.m. Vikas Khemani, founder of Carnelian Capital Advisors. The reason why you should hear this conversation, viewers, amongst other things, while you hear Vikas a lot, their performance in the last 3 years, they've yielded a CAGR of 43%. That's quite stunning, really, and which is what I quiz Vikas on. Then a clutch of corporate conversations, KRBL at 11:30, Sangam India at 12, and Mazgon Dock, which is a big one, at 12:30. There is also Bharat Pui of Pidilite at 12:45, MTAR Technologies, which had a margin miss at 1 p.m., Biocon, Siddharth Mittal Johnson at 1:30, and Rajendra Singh Pawar, chairman and co-founder of NIT Group, Johnson at 2 p.m. So a clutch of conversations, corporate and markets being covered today on BQ Prime. You might want to tune in for all of those. Thank you so much for tuning into the trade setup. Do watch out for some of the stocks that we've spoken about today and have a great weekend.